All right, so breaking news, let's say SoFi had their earnings leaked. Whether it was a mistake or not, we don't know. Bloomberg released their earnings. Stock is down currently 18%. It's halted. It hasn't moved since the leak has been, well, exposed, let's say. But if you looked at the stock price, you might say, oh, down 18%. Must have been a horrible quarter, right? But on the contrary, actually, to me, the numbers look actually very, very good. Raised guidance as well. Remember, they reduced guidance last time, not last quarter, but a month or so ago because of the extension of the CARES Act. So quite nice there. Luckily, I still have the page with all the earnings number on them. So let's have a quick look. All right, so GAAP net revenue of $330 million, up 69% year over year. 322 million adjusted net revenue, up 49% year over year. By the way, they beat guidance, the estimates, and for earnings per share, that came in line with the market. I believe it was a loss of 14 cents. Adjusted EBITDA of $9 million, positive for the 7th straight quarter. Remember, they expected between $0 and $5 million. New member adds of 408,000, ending the quarter to nearly 3.9 million, up 70% over year. Then new product adds, that's up 84% year over year to nearly 5.9 million. They added 689,000. And then, as I said, management raises full year 2022 guidance. So quick quote here from our friend Anthony Noto. We delivered another quarter of great results with record adjusted net revenue up 49% year over year, a 7th consecutive quarter of positive adjusted EBITDA, and continued robust growth in members, products, and cross-buy. The strong results, which we achieved despite volatile markets and the changing political, fiscal, and economic landscape, demonstrate how our strategy of building a full suite of differentiated products and services has created a uniquely diversified business that can not only endure but outperform across market cycles. So one of the main reasons why the stock was down so much today was because of Upstart. If you followed the stock, you probably know what I'm talking about. You've probably seen the video on Brian Faroldi's channel. He covered it with a great friend of mine, Brad Friedman. Go look at that video. They explain the whole quarter for Upstart. But that was one of the main reasons why SoFi took a big hit as well. He continues by saying here, because of the depth and breadth of our offerings, we were able to make swift and critical adjustments in priorities and spend as conditions evolved quickly to capitalize on growth opportunities and exceed our performance targets. Strength across all three of our business segments, lending, technology platform, and financial services, drove our record first quarter adjusted net revenue of $322 million and adjusted EBITDA of nearly $9 million. So as for the members, the products you can see here, great trend on the way up. Same thing with products, all looks extremely well. When you look at the business performance, right? If you look at the stock is completely broken. It has gone down for months and months now. As for products by segment, the main reasons why you shouldn't really look at SoFi anymore as a lending type of business is because of this, exactly this. You can see financial services products has, well, increased a lot, whereas the lending products, not so much. And this is why it's ridiculous to compare SoFi to Upstart, but in the current market environment, nothing really is normal. So, hey, what can you expect? But overall, this is a big picture. You should look at this and not say, oh, it's just lending. No, actually, it has been not lending for a while now. It has been more financial services products that has been increasing and increasing each and every quarter. Then we have tech platform accounts. This is also Galileo, now over 110 million. So that's great. Again, Galileo is a huge part of the investment thesis here. Talked about that in previous videos. If you want to watch those are going to be in the top right corner. Quick correction here. I said over 110 million. It's actually 109.7 million and it's up 58% year over year. Apologies. And you can see here the different products in lending. So they have home loans, personal loans, and then student loans. Obviously, student loans only grew 11%. Home loans is up 52%. Personal loans up 27%. Overall, it's up 20% to 1.1 million. Now and again, they do talk about the extension of the CARES Act, etc. So they say for the first quarter, student loan volume of nearly $984 million was essentially flat year over year, but declined significantly from nearly $1.5 billion in the first quarter of 2021 when demand accelerated ahead of the expected January 2022 expiration of the federal student loan payment moratorium, etc., etc. They also say here again that SoFi's student loan originations back below 50% of pre-COVID levels. And this is why, if you remember, they made some adjustments here with regards to their guidance. This was back in April. So the expected guidance for the full year 2022 is $1.47 billion and $100 million in adjusted EBITDA. Now, as you will see, they have actually increased it yet again. But first, let's continue and look at how well the business is performing. So the financial services, which is obviously the other side of the product line here, SoFi Money up 87%, Invest triple digits 112%, credit cards 504%. Yes, granted, it's something extremely small back in 2021, so that's why you see those huge increases. But then again, if it weren't successful, you wouldn't see those huge increases there. Referred loans, nada. Relay 113% up, at work 116%, and then overall 111%. And then here comes the guidance part of all of it. So first quarter adjusted net revenue of the numbers we mentioned before exceeded quarterly guidance of $280 to $285 million by 15% at the low end and 13% at the high end. Adjusted EBITDA of $9 million exceeded their guidance as well of, between $0 to $5 million by 74% at the high end. Then management expects a continuation of strong growth in the second quarter with expected adjusted net revenue of $330 million to $340 million. I do believe that the street expected a little bit more, so there's a miss on that. But then again, it's still up 39 to 43% year over year, and adjusted EBITDA of $5 to $15 million. And here comes the other upgrade or the update of their guidance for the full year. They now expect net revenue of $1.505 billion to $1.510 billion and full year adjusted EBITDA of $100 million to $105 million. They will further address some more details during the conference call, but I'm filming this way before the market actually closed. So overall, to me, looks like a great quarter, right? As of now, the stock has halted, so we won't really see the effects of this, to me, good print and again, upgraded guidance. The ones that they reduced, now they increased it again. Maybe they have some clarifications on that during the earnings call, but overall, to me, business is booming even without the loans, right? With the CARES Act extension, I'm probably sure they know that it will be extended yet again for political reasons, for nothing else. But overall, I like what I see. The stock is down heavily, fine by me. If you're a long-term investor, you might take this as maybe a good time to add, maybe open a position if you have been looking at SoFi for a while. To me, to conclude, this was a good quarter. Again, execution is key here, management, great. So nothing else to add. Obviously, do share your thoughts down in the comments below, and maybe do check out those two videos right here. If you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I'll see you all in the next video. Bye bye.